All right, all right. Ladies and gentlemen, we're going to start here in 10 seconds, okay? Abby, AJ, what's going on? Elise in the house. Dale, Dan, David, Harvey, Henry. Folks, we have a great session here for everybody. Glad everybody's able to make it today. Happy Sunday. Hope everybody's having a great weekend. We're going to get started here with Nick Shaheen. We will be talking about trade ideas, options education, options trade ideas, setups, contracts, a whole bunch of stuff. If you're new to learning options, this is the place for you. This is where you have to be. So if you're at this place, you're looking at this right now, it's a great opportunity to take on. Let's go ahead and bring on the man of the hour, Nick Shaheen. Let's go.
Damn, son, where'd you find this?
All right, yo,
Whoa, we got we're getting fancy. We're getting fancy.
Yeah, we are getting fancy, man. So the session you had, right? Sunday, how was it with the folks?
It was great. We had 70 people, I think, give or take. Mind you, these are people that spend all day, every day with me, and then they choose to come in on Sunday. And they're probably in here too. There's probably in here a few in here.
So so let's just get this started here really quick. If this is your first time watching, if this is your first time watching any of these sessions, put a 1 in the chat. If you've already been here before, put a 2 in the chat. That way we know how to take the conversation and have an amazing session so that we can all make money together, right? Let's go ahead and get this started, boys.
We have a lot of 2s, but a lot of 1s too. That's good.
All right, several 2s. I haven't seen this many 2s in a while.
That's because I mentioned that I have a webinar here and there were 70 people with me. So maybe some of them popped in here. 111. Hardly 1. Gotcha. All right, so I get an idea here. Cool. That's going to be fun.
Right. And here's the thing, Nick. I know that you do a lot of it. You want trade ideas, education. But that's really what it all comes down to, education, right? There's no point in making money if you don't know how you made it. That's just.
So, yeah, I don't consider myself as a trade alert. And it somewhat bothers me when somebody says, where are your results? My results is in how good you end up being after you being here. So that's my result. Is if you can talk options and investing at a high level after you've been with us for a while, that's the result I'm seeking. Meanwhile, I do share my trade ideas, and I'll go through some of them here and the results in the past. I choose to trade in a way that gives me an edge, literally, like a mathematical edge. So whenever I trade, something has to really go wrong for me to lose, as opposed to trying to chase price, always trying to chase price. That's difficult to do on a consistent basis. So we choose to do it the easy way. Hey, Paul, I see you here. I see you.
Tim Lee's in the house. What's going on, Tim? Ed Plummer, what's up? Eric, I see you there. Send me a quick email. So yeah, so let's get this started, folks. By the way, what you're seeing right now is the live room. That's where pretty much Nick is the whole day. And he also has a live session. But
so yeah, let me take over the screens. I'm going to share my screen and we'll go from there.
All right.
I think this one will do. All right, yeah. So the Sunday meeting results in this list. It's hundreds of tickers that I tabulate, and I give you the members clickable charts and comments as to what I would do with the stock. And that's what we just did. So on Friday, I sent out a note. Here's the form. Tell me about the tickers where you want me to do the homework for you. And I do the homework. So it's hours of work yesterday and then this morning. And then I did a video, three videos. And I just shared the videos with the members and this list. Let's say somebody was busy Sunday morning or wants to sleep in. They don't have to be there. They'll get the benefit of the doubt. And the benefit of the videos and the list. So if you're, you can find your tickers, they're alphabetical. I tried to usually before trying to smartly put them together is like, that's too much work. So it is a cheat sheet for you not to do any work. But I encourage you to do the work and see how it compares to mine. And maybe between both of us, we'll end up smarter. So that's what just happened. And I took a little break, walked the dog, had a bite to eat, and here I am ready to tackle the next task, which is this one. So also the folks here in the live room, chat room, sorry, they are busy. So I just scrolled up, and this chart from Doc saying something about I agree with you by Christmas. So I scrolled up to see he agrees with who, and it's Red. Red is pretty active. He's from the West Coast as well. He pops in late in the day and says good morning. I was like, okay, second shift. So I'm looking at the futures to see how he's anticipating some selling pressures, that whatever we did last week was in anticipation of something. So these are pitchforks that are pointed up, a couple of them, and then a big pitchfork down, and then another one sideways. So this is a whole bunch of pitchforks at different levels. This study is amazingly accurate, but you have to be an expert at it. And if he's really good, then he knows what he's talking about. And they usually have timing with the pitchfork. They can tell you by this time we should be in that area. So he thinks that we should have some selling this week. Wednesday, as you know, is Powell. So he's a complete coin flip. So my concern is, so by the way, Sunday, it's not just what I just did. Sunday night, when the futures open tonight, I will do another video for the members, which tells them what I'm thinking for this week. And I call it the strategic market update. That's probably the most important video. It's like 8 minutes. If you can't spend 8 minutes to strategize the week, I think you're doing it wrong. So in it, I'm probably going to say something like, next week is all about Powell and the jobs number, but less so the jobs number, because what Powell says in the middle of the week is going to matter a lot. So the only thing that was causing the drop in the stock market, so we started the correction last year, but the selling accelerated. If you look at the IWM, you go to a week and take out all the letters, reset. So all the selling has been like the June correction, the violent June correction was all based on words from Powell. Whoops. His words. Nothing was broken in the economy. So case in point, the earnings reports were not disasters. Everybody's perception is they're disasters, but they're not. If you look at it, they were absolutely good in absolute terms. And I'll walk you through a couple later. But so the words from Powell have been the only thing putting a lid on the market. I said, if you turn off news, if you say Powell is not in the game, he's no longer going to do anything. Would you sell Apple? Would you sell Google? Would you ferociously? You wouldn't. So the natural move would be up. So what he says will matter. My concern is the market has been an idiot. They rally going into any event with Powell, and if he doesn't say anything new, we throw a fit. Like what happened after the Jackson Hole. Hey, and then he comes out and says nothing new. Pain, pain, pain. The word pain kept coming up in his speech. Ooh, we fall 5% twice in one day. 5%, 5% down days within like 4 days of each other. So that was disastrous. So maybe we're doing the same thing now. But the question is, will he actually say something new? So Wednesday, find your shiniest quarter in the house, shine it up real nice, flip it 3 times, take the average, and then take the opposite, because it's this accurate. I'm being sarcastic. It is not accurate at all. So it's all about what he says and how the market reacts to it. I don't know what he says. So I have to be open to the fact that it could be a crapshoot. So go with the charts. The charts have been really good gauges so far, but definitely anticipate it being a coin flip. So don't have too much conviction. For example, if you buy a bunch of calls because you're anticipating a rally to continue, I would suggest you hedge your bet with a few debit put spreads to hedge your bet. In case we have a disaster, you have time to go in and unfold everything for minimal damage. I'm just saying. So things are crazy this weekend. Did you enjoy the Dogecoin 75% rally? I am long. I'm a crypto trader, and I share my trades, and they've been money. I'll share one with you now in a little bit. I am long Doge from a 9 cents area. I started at 20, nibble, and then it crashed, and then I went big. And with this rally, I'm up big, so I cashed out, and I will rebuy. I'm still long crypto. I'm just out of my doge because it was a special circumstances. I left a little bit just in case it goes ballistic. Okay. So the strategy is simple. The opportunity is everywhere. Sunday, I'm with you twice a day if you want me to. Monday, I'm with you before the market opens. I send out a note and I spend all day with you like we're doing here, but without minus my face. You will hear me talk and you will see my screen all day, every day throughout the week. And I share a write-up in the middle of the day, most days. And if you're actively trading and lucky to be in the live room, you also will see intraday opportunities, iron condors that expire the same day. They give us the opportunity to win 20, 25%. Scalps, if you're fast in and out, I'm not, but there are hundreds in there that are. It's usually about 310, 290, 320 people with me all day, every day, which is pretty astonishing. Now, most people cannot make it to the live room. That's why most of them live in the chat room. And there are hundreds more in here, hundreds more. So I share everything in writing here, and it lives here, and it doesn't scroll off the page. And or you can chat in the public room where everybody can post and my comments can scroll off the page. You can also send me direct messages. This gentleman right here tells me his son says, this guy looks like you, meaning me. And we're both Lebanese. So he sends me a picture of himself. We could be brothers. So we're not, but we could be. So that's fun. That's the kind of community we have. I promise you, 300 people in a room, the live room, and not one disagreement that carries forward. We have misaligned opinions, like somebody's long something, somebody's short something. Everybody's posting, not everybody. A lot of people post their trades. A lot of them are incredible traders. I am nowhere near the best trader in there, but I am an excellent moderator and I know the price flow. Like I can tell you where the buyers are, where the sellers are, and I'll help you find a way to monetize that. I'll give you an example. So if somebody is looking to actively trade something and they keep, like I had a comment one time, probably about a month ago, it was perfect. A long-term member, and he said, I nail it. I can chart really well. I know that this is a trigger up, and I end up chasing it. I end up losing money. I get screwed. He said it, but he used the F word. So I came up with an alternative. So if I knew that this was an actual trigger and price was rallying into it, I should buy the dip. So from here, I would say, if we were here and I was looking to get long that ticker, I can say to myself, let's say if we were here in time, this hasn't happened. I would say, I'm going to chase it up if it breaks out. Hearts flying. Or I will buy the dip for this. This way, if it does break out, I'm already long. And by the way, this is a 1 week chart, so it's super slow, but this happens even if this is a 15-second chart. And yes, we go down to 15-second charts. Why? Because we see 4 times as many ticks as somebody on a 1 minute chart. So the idea is solid. So if you cannot chase and you find yourself, because you see it break out and you go to enter, and by the time you get filled, you're somewhere over here. And if your target is over here, you're stuck. You can't make much. Let me see here. Whoops. I have a habit from the other one. Clear. So the idea is to make sure you trade the speed with which you are capable of. Like, I know if I try to trade fast, I will mess up because I'm busy looking left. You just saw me distracted because I'm talking to other people as well. So this happens all day and I make mistakes. So in this case, I know the buyers are in charge. I know the dips are going to be bought. So if I wanted to break out of here, I'm more likely to do what I just said. Instead of waiting for this breakout to chase it, I would have bought the dip into knowing support. Look, they're buying these moving averages, so they're probably likely going to do that. Come to here and break out, test it for footing, break out, finish the job, right? So that's how breakouts happen. They go from ranging this way and they tighten, and then they either retest support or just finally break out and confirm footing and finish the job. So if you're not fast enough to take advantage of this, because that's not too big, then you'd be better off to buy it on a dip. And I actually tell them how to do it. You hear the fast traders say, I got filled. I got filled. Why? When they're here and they want to buy a call, and let's say they want to buy this call and it's $1, I'm making up numbers, they will offer to buy it at 70 cents or 80 cents, which means they're waiting for a dip. And the order is open. It's not going to get filled. They're underpriced, right? They're offering less than what it's worth. And if the dip comes, that dollar gets cheaper and cheaper, and suddenly, boop, they get filled. And they're long. They're not chasing. They're in fact doing the opposite. They're backing up to run forward. And this way, you're never chasing too late. You miss the opportunity if it doesn't dip. There'll be 100 more, but you're not getting caught. So somebody's asking for STEM. If you're in here, ask me again later. I thought I saw you in here. That's Tom. Anyway, so that's the concept of being in the room. I'm looking out, you're looking out. We have 300 pairs of eyes looking out for opportunities, upside, downside, headlines, threats, rumors, everything. And I want to tell you one thing. Yesterday, I was having a meeting with marketing brains, not me, outside companies that are picking my brains for marketing stuff. I told them, all you have to do if you're trying to make my webinars like this one more effective and people believe us about the message and get excited, all you have to do is just ask some of the members to come in here, and they'll come in here and be testimonials. But they were more interested in what would get people interested in just attending this webinar, which is the idea of one thing: don't ever trade alone again. Please do not trade alone. Why do you choose to trade alone? Belong to a group, pay group, free group, whatever it is. Make your own group if you can. It's super difficult. You need experts from many disciplines. I have experts from many disciplines in there. I'm smart enough to know who's full of it and who's not. Even though I'm not an expert in harmonics, I know it inside and out to the point where I can use a harmonics tool perfectly, and I can tell you who knows his stuff about it and who doesn't. Same with Elliott wave, which, by the way, there are very few experts out there. There are many that claim it. I've met a few that are amazing, and they are few and far between. So don't dabble in the tools you use. Become an expert. The other day, I bought $1,450 worth of tools out there, charting tools, to see what's worth it. And I narrowed it down to 3 that are worthwhile. So I share the findings with the people in my room. Some of them end up in buying the tools and some don't. So there are tools out there that are great. You don't need most of them. If you tell me you cannot use any tools, I tell you that's fine with me. Then if nobody else can use it either, because I know my tools, my number one tool are my eyeballs. I'll just look left. Like if somebody says, I want to invest in this company, and forget that this is a 1-minute chart. Let's say this was a daily chart. I would say, what happened the last time they were here? I don't know. Well, you don't see anything. So you need to expand your view to see what happened the last time these guys were here. So let's go to a daily. What is this stuff? Oh, it's the IWM. Okay, so now you can see that we're running into a prior failure. So this is not a place to load up longs if you're not long already. This was a place to bet on the floor to hold, which is what we did. The assumption was that the floor we put on the CPI disaster was an actual floor. So in the live room, folks, the ideas are flowing all day of all time frames. I give priority for the fast trades because they are the priority because they're time sensitive. But we talk strategies for weekly swings, even like long-term investment swings. And I'm trying to find, I forgot, I meant to bring some testimonials hot off the press on last week. I had a few, and while I'm talking, I'll try to find them for us. But in the live room, the flow of information is just absolutely mind-boggling because they force me to level up my game in order to be able to speak their language. So for example, I'm going to bring us here. This was Friday, scalped 200%, made 80%. This was based on one or two few comments I had. So here's how this is unfolded. I was expecting the Bears to win the fight late in the day. I was wrong. So I lost a little money on that bet for myself. But late in the day, Kamal comes into the room, jumps in and says, I see a close of 39.13 or whatever. And we were not even above 3,900. I was like, whoa, that's out of the blue. And that's a member, by the way, who learned some tricks from me. And he's smart enough that he added to a spreadsheet. So now he has a number and he shares it with us like 3 times a day. And he's not alone. There are 2 other spreadsheets that are phenomenal also that are working for us on a daily basis. So I said, if that's the case, I would buy an SPX call for $1. That dollar turned into $4.50 and then some. It just, whoever bought it more than quadrupled their money. And it was a matter of minutes. So these are people that popped in and said their results. And this was based on somebody else's number and me just saying what I think should be done. Like this guy right here, this is his only job. He doesn't do anything else per him. His name is Jim, and he shares his trades, and he's super fast. I'm not nearly as fast. He's in and out like 100 times a minute. I'm not that guy. And these guys aren't either. So they were able to win along with that setup that I had because it wasn't very time sensitive. Solus, super good at what he does. He shares his charts from TrendSpider, and they're perfect with comments and trade inputs from his own mistakes and where he lost money and how, whatever. So everybody's pitching in. Let me see here. We had 311 people at that time. What time was that in the day? 9:56 a.m. in California. So 3 hours to go in the day, trading day. So they're looking at my screen. Look, 15-second chart with a breakout scenario and a breakdown scenario that never developed. Instead, they went up and they broke out above that also. So we were ready for the fact that we were wrong and we flipped by concept. So this is the kind of thought. Fast trades, but the same concept applies longer term. There you go. Craig, I just literally said that. I totally appreciate where you're coming from. When I first started, let's go back, Rodrigo. I'm going to remind them the fact that I started with Benzinga from 2011, I think. And my offering back then was simple. There was no live room, no chat room, just me sharing my trade setups, which were boring trades with Craig in mind, where if I had a job or a family commitment or a time commitment that requires me, that doesn't allow me to be there all day babysitting a trade, what can I do? Well, I'll share with you the thought process. So let me go to Apple. Everybody knows Apple, right? By the way, we made a ton of money on Apple at the earnings. When it reported and fell to 130 or whatever, we were live covering it because I stayed after hours. I stayed over 11 hours logged on. Get that from somebody else. I said, whatever it was, 136. And I was like, buy it. This is ridiculous. And they made a lot of money if they did. Same with Amazon. Buy the dip, buy the dip, buy the dip. And immediately made $10 per share. So here's my lazy way of trading. I told you I want to be I want to be Ron Popeil, if you're old enough to know who that is. Set it and forget it type of a trade to a degree. So oh my gosh, Mark. Look at that comment. Whew, I'll pay you later. Okay, so here's my thought process. It is more comfortable for me to say, I don't think Apple will be here in the next 60 days than Apple will be here in the next 60 days. Okay, so this comment is easier to say. You can see why. It's easier to say that Apple will not likely be here in 60 days. Easier to say it than Apple will be up there in 60 days. What's the difference? If you're buy and hold, you do your homework and you see a breakout and you go, Apple's going to there, and you lay money on the line. And if it doesn't go there, you lose money. If you're doing options, if you're doing stocks, you don't lose money. You just have to wait for a long time to get paid. Maybe you lose money. I don't know. Whereas my style of trading is I collect money for that statement. Meaning somebody disagrees with me out there and says Apple is going to be at 100 in the next 60 days and they want to make money off of that idea. I'll sell them that lottery ticket. In other words, I'm trying to sell losing lottery tickets for people who are super bearish or super bullish. So if I disagree with that, I would sell them something up here too. So if I sell this one, X and Y, I collect money from this guy and from this person and that person. And now I'm collecting from both ends. So if Apple does nothing, I win on both ends. And if Apple does a lot here, but doesn't go above me, I win on both ends. If Apple does this and doesn't go below me, I win on both ends. So the only time I'm wrong with X is if Apple completely collapses. And if only the only time I'm wrong on Y is if Apple goes ballistic above all expectations. So these are the two extreme scenarios. So unless there is an extreme scenario, I'm going to win. How much? Like 20%. On my risk versus you spending that money and needing a 20% rally to make that kind of money. I don't need anything. I just need time to go by. That's all I need. It doesn't win all the time, but I can show you I'm not authorized to do that. I was just telling Rodrigo, I was like, I wonder if I should do that. So I was updating the record of the trade setups. And these are some of the trade setups for one of the groups. I forgot which ones. These are the ultimate group. And I'm scrolling. This is now. And look, green, 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 green. And I'm scrolling back to see the update. Green, green. This one is still ongoing. Probably going to end up red. Shorting the dollar has not been easy. I'm going back. SE is probably going to be red, assigned at 55, if not closed for red. Green, green, green. I'm going back. Green. This one, to be honest, I think it was green. I wasn't sure, so I left it flat because I didn't know how to log it. I couldn't find my notes and the write-up to exit, so I didn't want to cheat and say it was a winner, and I know it wasn't a loser. So you can see, as a trade alert, it still works, but please, this is not a trade alert service. Do I do strangles? I never buy strangles, no. You know why? Because market makers sell the straddles to make a living, and they don't lose often. So I don't want to play against the market makers. So my concept, be the market maker at a tiny level. For example, I know this is somewhat of an organized, not to use the word rigged game. It is a casino of sorts where there is a lot of chance and a lot of homework that it goes in to lessen your chance. So you can give yourself an edge. You can enter this casino and actually play along and win with the dealer at the expense of other casino players. So the dealer is going to let you win. He's going to let enough people win to attract more people to come in and make all the other one lose. So here's the assumption I go on. The market wants to screw as many people as possible in the options world. That's the point. And I'll show you what that means. Somebody's asking, what's the strangle? How about we jump right into that? But first, I want to recap what I just said until now. The live room is fast-paced, but it is your opportunity to jump on board and hear me answer your question of any speed. Let's say you've got a job and you cannot be there all the time. And this one day you have a pressing matter about something, a ticker, an idea, a trade that was wrong. You made a mistake in your trade and you don't know what the hell you have. You pop in, Nick, help me out. And you can do it in private. There's a direct message there. I'll answer your question regardless of how long the trade is. So this is me dedicating my entire day for you, whether you need me or not. I'm there all year. And the chat room, which is not the live room, is open 24/7 for you to pop in anytime you want, place a question, direct or in public, and I'll answer it whenever I see it. So I'm not sitting there waiting for you, but I pop in all day, every day, including on the weekends. Like I need to go address a few questions that just popped in while I'm here. I will do that. And so the idea is that you have recourse, me live all day, every day. You have recourse, me on call all day, every day, and night and weekends, me doing homework for you all week, me writing up the day before it opens, telling you what to look for, sharing trade ideas that don't need you to be there, that are designed for people that have jobs and don't have time to babysit the market. Oh, and I forgot. You have, as soon as you log in, if you join, I have a set of videos which I'm in the process of adding to. I'm working on a course to add to it, and I'm trying to bring them here. It's a bunch of evergreen videos. Evergreen meaning they're not time sensitive. And it's like, for example, this one says, what's a put option? I'll answer your strangle in a second. And then what's a call option? And what is a spread in general? So this one is 10 minutes, 12 minutes, 10 minutes. And then what's a credit spread? Also answer things like, what is a cash settled option? This is really important. So if you don't trade the SPX, you should. And if your platform doesn't have it, you should go get a new platform, because that's an option that expires every day. Every day I have the opportunity to make 25% out of thin air. On Friday, I lost a little bit of money because I forgot my rule. Don't trade on Fridays with that sucker. So I have a system in place now for somebody to slap me on the wrist if I want to do it next Friday. But that's how it goes. And so these videos are available to you as a member. So the static chat, the live chat, the write-ups, the Sunday video 3, and another one 10 minutes for strategy and updates during the week with trade setups and all the questions you want. So think of it as a classroom that's open for you at your own pace, whenever you want, all year long, for piddly crap money. And on top of it, you get to maybe earn some money along the way. Now, I get a question, how much money do I need? 0. If you've never done this, or if you're new, you should be playing with paper money. So join the group, consider it tuition, invest 0, open a paper trading account, and start trading for fake. When you get the mechanicals behind it, of course, playing with fake money is slightly different psychologically, like playing poker online.
Right.
But it gets you in the habit. So once you know you can do it mechanically, then you try one contract. So you risk like maybe $200, $400, and that's it. You try it a couple of times, 3-4 times, maybe a couple of weeks to see a couple of cycles of sales and rallies. And so then you jump in with 2 contracts, and then you get to a comfortable level that's appropriate to your account size. You don't need a lot of experience, and you don't need a huge account. The bigger the account, the easier it is, but you don't need it. You were saying?
Hey, Nick, really quick here. I'm getting a lot of emails, questions about the live room. So we'll just get this out of the way and we'll get back here into the session. Thanks a lot, folks, for sending these. So are the sessions on Sundays recorded? Yes, they are recorded. They're posted in the chat room. Does everybody that joined get a free laptop? Yes, we are hooking it up. You will get a laptop if you join. Chat room schedule. The static chat room is open 24/7. We have an international community, so there's people from all over the world. And then the live room, where Nick is showing his screen, webinar style, is from about 8:30 a.m. to about 5 p.m.-ish. So that's throughout the whole day, Monday to Friday. Is there a money-back guarantee? Yes, Joe. There's a 30-day money-back guarantee. The price at renewal will be the same as today, 70% off. And let's see, we have a question here from Tim. Do you teach strategies for total beginners from A to Z?
So I will answer that in a pretty clear way. One second, let me finish this. Trying to multitask. So I love teaching, and you will see examples of it now. I'm gonna jump into teaching mode now that I told you what the webinar, what the live room is, and this happens in the live room at least once a day. Okay, so this is not an official class from A to Z, but you're going to learn more being 1 week in there than you've learned in a long time, because it's practical, hands-on, and it's plain simple English. I do have videos that teach from A to Z. I am available to teach from A to Z. All you need to do is just get engaged with me. When you join, if you sit back and expect me to do the work for you, that's not going to work very well. But if you jump in and you say, I'm here, here's my situation, what do I do next? And then I will say, if I'm in your shoes, I will go watch all these videos, write all the words you don't understand, and come back and say, I watched this first video, I got hung up on that word, explain that to me. I'll explain it. We'll move on to the next lesson. So yeah, in a sense, it is, but it's not an official, okay, class is on Monday at 6 a.m. or whatever. So you will learn. I'll show you an example. Somebody asked, what's the strangle? That's that. Somebody just asked that. Are you still here? Because I'm addressing your question now. And let this be an example of what happens in the live room. So this is a practice platform that I have with E-Trade. I am not recommending it. Please do your own homework. It's full of bugs. It's good for teaching purposes. Okay, so I'm going, before I answer what's the strangle for Henry's question, I think it's important to answer the question in general, demystify options to a bit, because I'm fairly certain there are some of you here that don't know what options altogether, don't know what they are. So let's demystify options. First of all, you don't need to own stocks to buy and sell options. You do not need to own stocks. Anybody can buy and sell options if they have a properly set up account. They are not riskier than stocks. They can be riskier than stocks. They also can be safer than stocks, and I'll explain to you the scenarios of those. So the idea is that everybody thinks options are more dangerous than stocks is ridiculous. They can be, because they are more profitable if you get it right. And of course, the opposite of that, if you get it wrong, you lose fast. So you have to be super good at discipline, not super great at forecasts, but super good at discipline. If you take a bet, number one, you have to make sure it's not a willy-nilly bet, that it's got purpose. And number two, that you know when to call it quits. If you got those two things right, you're going to be avoiding a lot of blowouts. Okay, so let's go into the definition of options. Let's demystify options. What are they? They are a bunch of contracts. That's all there is to it. I think the idea of options came from the olden days. Let's say you're a pizza shop, and cheese is a huge expense, and cheese prices fluctuates all year. So you went out and bought a futures contract of sorts. You paid somebody a stable cheese price that they give you, and they deal with the fluctuations. They know enough about cheese in order to make money off of you, because sometimes to get you the cheese, they'll buy it more expensive, less expensive. In the long run, they make money. In the long run, you may be overpaying overall, but your cheese cost is stable. Therefore, you can price your pizza to be stable, and you can forecast your profits and loss statements. So the options is kind of like a futures idea. So in this case, they are contracts, and all contracts have terms, conditions. And let's go through a few important ones. The first one is, what is this about? It's all about Apple. I chose Apple. That's one term. Quantity. Everything here is 100 shares. If you choose from this side or from this side, whatever you choose, it's 100 shares. So it's Apple, and it's always 100 shares. One contract, 100 shares. So we've gotten two things now. What is it? How many of them? Time. I chose December for illustration purposes, so I chose 47 days on this contract. Anything here has a lifespan of 47 days. Okay, so now we got some of the stuff. Also, level. I can choose the price level I want. Okay, I can choose it. This is current price about. And there are two sides. You can see that, right? So they come in two flavors. We've got puts, put options. We've got calls, call options. These are not bearish. These are not bullish. Both are both. It depends on what you do with them, and I can explain a little bit later. But get that out of your head. So now we've demystified what are options. Now, they have prices. These are the prices for the options, the mark. That is the going rate for this option. That's usually the middle between bid and ask. And we have a whole bunch of other stuff. I want to bring your attention to this guy here in a little bit, the delta. That's a super important one. All right, so somebody asks, what's a strangle? So a strangle is when somebody takes a strategy to range prices. So this is a strangle of sorts. So if I think Apple's going to fall too much or rally too much, and I don't know which is going to happen first, I would take both bets. So I'm strangling the price, and I'm buying both bets. I would win if Apple runs big or falls big. Otherwise, I wasted my money. So they said, do you do strangles? I would be more inclined to be the seller of strangles than the buyer of strangles, because that's what market makers do. So this is a strangle. What is this then? This is a straddle. So the straddle is when they buy a put, and they buy a call at the same spot. So now they're taking both bets. Same scenario. You need Apple to fall fast or rally fast, and you need it to go beyond $15 for you to start making money, because you're paying 7 and 8, 15. I'm rounding up. You're paying $15. So you need a drop of $15 or more to start making money, or a rally of $15 or more before you make money. Why? Because you're spending $15 per contract in order to make that happen. So these two things are the same concept: strangle and a straddle. That should answer your question, friend. So Henry, I think it was. The straddle is at the money, both calls and puts. The strangle is you buy this one and you buy this one, and it could be anyone's, but they're not at the money. So this is the scenario that he just asked about. So why are options people so scared about them? Because let me now take you into, I'm going to get a piece of paper, because this is a to-do you need to write and put on a sticky note under your monitor or on your phone if you trade out of your phone. And you should not take your next step before before you go through these check marks. So first, I mentioned earlier, never ever, I call it NTNT. It's an acronym that I made up and it's stuck. No trigger, no trade. What is that? A trigger can be a thesis. So if you don't have a reason, why am I taking this trade? Can you convince? My mother is over 90. She can't even use a calculator. And she lives in Lebanon, so her funds are frozen by the bank, so she definitely doesn't have extra money. If I cannot convince her to put her money in this trade, why is my money okay to go in it? So be as hard on yourself as everybody else. So I haven't discussed the delta yet, Henry. Hold on. So the T can be a thesis. It can be something on the chart. It could be an idea, but you need a reason, and that reason why cannot be, I thought it was going to go up. No. Why did you think it was going to go up? So don't ever take another trade, please, not another one. Like, start right now, if you don't have a real reason that you can explain to somebody else. Okay, that's one, NTNT. That is an absolute must. You should start it like yesterday. Not another trade, not another dollar risked without a real reason. Because how do you know when to pull the plug? So if you took a trade based on earnings and the earnings come and go and nothing happens, why are you still in that trade? You turn the trade into something else. Don't. If you took a trade because you had an idea, like I had an idea, I'm asking myself, why is, what is that? Anyway, if I had a stock that I thought was going to split in the next couple of weeks, and I think that people are going to chase splits, so I want to be jumping the gun and take the money from the people that are chasing splits. And I take the stock. Now the name escapes me. Shoot, I had one in mind. It's a $500 stock in the Dow. But anyway, if time passes and my thesis doesn't develop, I should get out of that trade. Okay, so that's a thesis on, it could be a trigger on the chart or a thesis in concept. Now, once you take that, you have to, as soon as you take the trade, you have to also get yourself an exit strategy. If things go bad, how much pain are you willing to take? So you set a percent, you set a dollar amount. Sometimes it's easy as, oh, the stock chart lost level X, I'm out. You need an exit strategy if things go bad. If things go well, you need an exit strategy. Okay, I plan on taking 15%, first batch, 20%, I'm out. Or if it hits level whatever, I'm out. So have a reason to take the trade. And secondly, please have an exit strategy. Those are like, you should start right away. Right away. So earlier I said, pay attention to the delta. And I'll tell you one thing. this is a game changer for me from years ago. You notice I haven't spoken Greek yet. I'm explaining options and I haven't said one thing about it. You know, delta is as Greek as I get. If they had a different name for it, I'll put it. So you can go and study the definition of the delta. Plenty of courses out there. They'll tell you, oh, it's the change in the contract based on a $1 change in the underlying. So go trade that concept. Or you can just say, what the delta is, this is my odds of success or failure. So when, let's back up a little bit. We'll go back to the delta. Think about, I'm going to give you like 10 seconds to think about the definition of risk. If you were teaching a class and they told you, teach about risk, define risk, how would you say it, right? You don't have to punch it in here. I just want you to think about it. And I can guarantee you, all of you get one part of it right, and almost all of you will miss the other part. You know it, you just don't know how to say it. And with options, it's super important to do. So the way the way I think about it is I need to break up risk in two pieces. Okay. The first piece, you guessed it. Ah, Laura, you ruined it. Good job. So the first piece, everybody guesses. How much can I lose? Right? Nobody thinks like Laura. Good job, Laura. What are my odds of success? So the first piece is easy. Okay, I've talked it out with my family. They let me risk $5 grand on this trade. I can survive it because I have an account of 100,000 or whatever it is. So 5K total loss is acceptable. You move on. If the total loss is not acceptable, too much risk, out, you're fired. Okay. The second part is the part you manage. This part you don't manage. You decide on and you move on. Check mark, decision made. That's the part you manage. What are my odds of success? So with options, it's easy. It is so easy. Let's say you don't do options. But my brother is a surgeon. He doesn't do options, and he's not very good with stocks. He just invests with a fund or whatever. Let's say he says, I'm going to buy Apple stock. I'll say, okay, so what are you thinking? If he tells me, I think it's going to be 190 in about 4 months, I'll say, okay, let's go see what the market makers say about that. And I can literally go, is this Apple still? Okay, what did I say? 3 months? I can literally go to January. What did I say? 185? God, I'm so, not 190, I think I said. I'll go here and I'll tell him, well, brother, I don't think you're correct, because the market maker, that's the delta, says that you have a less than 10% chance this is going to happen. So check this out. This is the delta. I told you it's your odds maker, right? This is where price is now, and it's about 50%, 50-50, 0.5. And if you look here, it's about the same thing, 0.5 on the put side for the deltas. Forget the minus sign. I'll explain why that is. So if it's 50-50 here, look how it drops. My odds are dropping. So let me put it in plain, simple English, and you'll get it. It'll click. Let me say it in plain, simple English. There's very little chance. That's a small number, 0.08, not 0.1, 0.08. So like 8 to 9%. There's very little chance that Apple will be at this price in 82 days. That's exactly how I would read this table in plain, simple English. Go find me an options class that says it that way. There's very little chance that Apple will be at 190 in 82 days. That's not my opinion. That's the freaking market maker's opinion. All of these prices are done by market makers. They set the prices because they're selling the risk. Us are chasing the hopes and dreams of rallies and dips, and we're buying the stuff from them. And they'll price it in a way where they are guaranteeing themselves a win, which means most of us are going to lose, which means we better be market makers, not fools chasing prices, right? That's how the casino works. If the casino lost more than they won, they wouldn't be there. If this didn't work in the favor of the market maker, it would not exist, I guarantee it. The minute we all start to be really good, this will end. So this is the point. So now I have a tangible number that I can manage to. Remember, I said risk is two pieces. One, how much can I lose? And the second one, what are the odds of success? Right? So that's the one I manage. Let's say I buy a call and then price falls and this number drops. The delta will fall with price and it turns into 11. So now my odds were 30%. Now they're like 10. So this is where I decided, so I'm managing my risk. I don't like my odds anymore. That's literally what it means. So what do? Let's say the trade still had $500 in it. I would rather cash it in, take the loss, use that $500, put it somewhere where it's statistically still viable. So if the trade up here is down from 1,000 to 500, I would rather close it and reopen it down here with only 500. Like if it was 10 contracts, I wouldn't open 10. I would open enough to not risk $1 more. I'm not increasing my risk because this is sacrosanct. Never increase your risk, never. And I just want better odds. So I take the 500 from here. These are dead soldiers. They're dying. They're just going to die if I leave them out there. I better send them home and bring in same number of soldiers, not risking more lives down here for a better battle. So that's the concept, management of risk, dollar amounts and odds of success. These are game changers, folks. I just gave them to you for free. Game changers. These stats are right there. This is an options chain. I could have picked one for December. I could have picked one for 2 years from now, 2025, January. So if I go to January 2025 and my brother said, I expected the next 2 years to be 190, I tell him, you have a damn good chance it's going to be a 190 because look at the delta, it's 50. So it's a different kind of concept. So let me show you why options are not riskier than stocks unless you make them. So I'll give you an example. Usually Tesla is the jaw-dropping example. And it works on all stocks. Who likes Tesla here? I'm pretty sure half of you, more than half of you, like Tesla. So I can tell you, I can make an argument for Tesla in 2 digits based on chart patterns. That's it. I'm not saying it's going there. In fact, if you're in my team, you hear never short Tesla from me. Buy the dip in Tesla, you'll never lose. We just did. So there is a chance for Tesla to be 2 digits if the stars and moon aligned. So let's say you're looking to buy Tesla, but you're afraid of a big drop in Tesla. So how about you get paid for the opportunity to buy it lower? I'll show you an example. So let's switch over to Tesla stock and go to a 1-week chart. Okay. All right. So I'll give you the first impression on my concern. If I do this, whoops, that's a head and shoulders that they're looking to lose neckline. They can drop below it, but they can still salvage it. So if Tesla goes above 240 and stays, I'm comfortable. Otherwise, it's likely to lose it, come back, and it becomes like NVIDIA and AMD, and it does one of these for months and months, and it could reach this. Not a forecast. My concern. That's why I need it above 240. If you think this doesn't happen, I'll show you AMD and NVIDIA. When I drew my arrows, people said, you're nuts. And guess what? We're at the arrows right now. So anyway, so would you love to buy Tesla at 140? Okay, that's the question. If somebody wants to buy Tesla now, let's say my brother says, I want to come buy Tesla stock. I'll say, okay, you buy the stock. I'm going to do what I do with Tesla. If you're going to buy the stock, I'm going to give you my scenario of opposing idea to buying the stock. And I'll go into the options chain and I'll say, okay, you buy it wherever you, he pays 228 for 100 shares. That's a pile of money, right? So I go and I say, how about I collect $400 instead? So I get paid for the opportunity of buying Tesla at a lower price at $160 per share, and I get paid hundreds of dollars for the same bet. So what's the difference? The difference is that he will participate in a Tesla rally. I wouldn't. But let's say on a bad day, if I did that when Tesla was falling down this way, I would have made thousands off of somebody else's fears. They'll be panicking. Oh my God, it's going to 180. I was like, okay, I'll buy it from you at 180. They'll give you money. So that is selling a put to own shares. Never sell a put unless you want to own shares. And in that case, my brother bought the shares at face value. I said I would buy the shares lower and I got paid for it. He spent thousands and thousands to do his bet. I didn't spend anything. I collected money for my bet. My profits are limited. My odds of success are through the roof compared to his. And if it takes a tumble, he lost all the way down to 160, where I didn't even start to lose until it gets to like 154. So that's how options can be safer than stocks, depends on the scenario. And I can say that for Apple. So I'll give you an example on AMD. I promised you the same AMD look. Okay, so this is the AMD weekly chart. Great company, excellent management. I own 2 AMD machines. I will not buy another one. This was my first AMD machine, and I'm totally disappointed. I said when they lost this line, I said, that's a huge head and shoulders. There's downside like this. They called me crazy. But that's what's maybe happening with Tesla. Tesla is like right here, right now. They're recovering. I said 240. That's their 240 line. Otherwise, you fall and you start bumping against that, and then you can't recover. So watch this. Watch this. So I put that arrow months ago, and look at where AMD is right now. I could do the same exact thing for NVIDIA. Same thing. Neckline that broke a little bit higher, and they couldn't recover. And I had this arrow and that arrow, and look how close it is to my arrow. This is my arrow. This is the actual measurement of the head and shoulders that broke. So Tesla could have that scenario happen to it. I don't think it will, but it could happen. Anyway, I was going to show you the AMD comment on how you can make money off of people's fears. So you remember during the pandemic, all stocks fell off a cliff. And it is a viable reason why to fall off a cliff. We shut down the world. So it was a scary thing right here. So I remember AMD, good company. Lisa Su is doing a great thing. So on the first dip into this zone, that was the first dip, I went out and sold $22 puts in AMD. I went out and told somebody out there, hey, if you want to sell me your shares at $22, I'm your guy. They paid me $2,200 for that. No joke. It was $2.2 per contract. And then it bounced, and that they lost half of their money. I made 50% of max gains, and then it dipped lower. And my bet was for October. I said, between now and October, if you want to give me your shares at 22, I'm your guy. So basically, I said, give me your shares here if you want to, from here to here. And then it took another dip. So this 2,200, I started losing money on paper. So I repeated the same trade only for July. I said, I'll repeat the same trade only this time at 20. I made the same bet. I said, if you want to sell me your $20 put the shares at $20, they paid me another $2,200. It was eerily similar, 2.2 premium per contract. So these people, 2 batches of people, panicked, and they needed a savior. I was there. I'll take your AMD. Come on. And I took their money. So I was making the calculated bet. I knew their P&L. I knew it wasn't cheap, but it wasn't expensive. I knew it was a good business, good leadership. World is growing. It was a buy the dip moment for me. But look how much room I left for error. Yeah, it was a buy the dip moment, but I left 20, 30, 40%. So not everybody can sell naked puts, but you could have done it in a credit put spread, also called a bull put spread, which I'll show you if you remember. It is an easier way of doing it, where finite losses and smaller gains. But that is the scenario. Take advantage, become a market maker. I was literally a market maker. I was the insurance company selling somebody some peace of mind. It's a win-win scenario. They love their shares. They want to keep them. I love their shares. I want them at a lower price. They're paying a premium. I'm collecting the premium. If they don't give me their shares, I made money. If they hated their shares, they would have sold them, but they didn't. They want to keep them with insurance. They chose the wrong insurance. That was weird what they did, but they did it. So I was the happy gainer. The broker's happy. They made money off of both of us. So I didn't need to have shares in order to sell put. In fact, the people that bought the put didn't need to have shares either. If they were shorting, that's the only way of buying a put option is bearish. If you don't own shares and you buy a put, the only way you can make money is if price falls fast. If you buy a put and you don't own shares, that's the only one scenario where a put is actually bearish. With the calls, same thing. The calls are bearish if you don't own shares or anything and you just sell calls. If you sell calls, don't ever do it. That means you're naked short the stock above that level. Don't ever do that. And not in this environment. No, not while Reddit is up and running. All right, let's see what we have here. Which trading platform can perform? All trading platforms should provide the same opportunities. You just need the account to be approved to do whatever you want. And there's an application for that. Why not just pick options with 75 to 90% deltas if they always work out? That's what I do, Henry. That's what I do. That's why you see all these greens here, because they're boring trades and they deliver their maximum gains. So yeah, that's what I do. So yeah, you're not wrong. When we do puts, the price goes down or up. First of all, when we do puts, there are two sides. Okay, there are two sides of every transaction. Who is this? Wow. Okay, there are two sides of every transaction. So you hear on CNBC, they are buying the $20 put in AMD. They are not buying the $20 put in AMD. They are transacting, because guess what, folks? When somebody's buying, there's the seller on the other end. So it's a buy. Every buy is a sell and every sell is a buy. So when somebody says they are selling and they are buying, that somebody is making an assumption. Assumption. When you make an assumption, I don't know the buyer, I don't know the seller. Why should I side with one person or the other? Their assumptions are based on whether it's done on the bid or on the ask. So it's like is it more of a desperate buyer or a desperate seller? So maybe the buyer knows something, maybe the seller knows something. Just take the information, put it in your hopper of information, and make up your own mind. Don't be a sheeple. That's a word I made up. Don't be a sheeple. So don't just follow, because we're humans and we tend to follow. If we see people running in one direction, we run in that same direction. You should stop in investing. If everybody's running in one direction, stop and go into the room they just left and see if somebody left a purse. Just peek your head in there to see if they're running in fear. Then, be careful. Poke your head in there and come back in, and then poke your head in there and say, okay, I'll go in. Don't just jump in for no reason, because that's the FOMO part. You see it on the 15-second chart. You'll see them all piling in at the wrong spot. So if I do anything best is during the live sessions, is that we stop people from going in at the wrong spot. And more importantly, we take advantage of those people who actually do go in at the wrong spot. It is eerily, you should join it just for the fun of us drawing arrows one time and see them come to fruition. Like I would do this. I'll show you. Why should I tell you? As the song goes from Canadian friends, Rush. Show me, don't tell me. Is it the QQQ? Load layout. Show. I think this is it. So part of the service I provide is before the market opens, I share a path for the day. I'd like you to see the path I drew a few days ago. This was it. These were not there. This was my guess of the price action. Check it out. Watch. I'm going to move it left, just left. This is not a coincidence. We do this all the time. If you don't believe me, this might be it right there. So I had an arrow saying we might come down to here, bounce, and get to here by last Wednesday, right? The problem, I was spot on. They got down to here, they bounced and got to here. But the problem is they got to here in a day. That was way too fast. Whoops. They came down after the fact, jumped out, and got to my target in the same day. That was not what I had planned. My plan was to take 3 days to get there, not all the way up here. But anyway, this was my target, and look where they failed. I didn't move this. Look, it's still there. This was, look, see, 284 and change right here, 284 and change. I didn't move it, and I'm on records. There are thousands of readers that saw this before, and most likely I'll be taking longs. And so if somebody saw this ahead of time, they knew exactly what was going on. This was the chart. And then they fell in. Guess what? Look, boing, not a coincidence. Look, if you don't believe in charts, that's not a coincidence. Most likely I'll be taking longs. I move the box over to here. And if we lose this, we're going much, much, much lower. So if I look at the small caps, I don't have many concerns yet. They can run a little bit. When I look at the SPX, I have a lot of concerns because we left holes down there that I'm not a gap guy. I don't like to say, oh, there's a gap, we got to go fill it. But this gap is too big. And if we have a conniption and we're headed lower, it becomes a magnet. You heard that part? If we're headed lower, they look left and they see a gap and they'll make a beeline for it. So somewhere around the 3600, let me see here. At what time frame it's best visible? This one right there. That's pretty big. The IWM crossed its gap, and RUT, that's the small caps. At least they filled most of it. The QQQ, which is the NASDAQ, did not do that. I did not check the Dow. UNH is that company I'm thinking about. Okay, so this is a real life question for you guys. Anybody know UNH? So if I know something is the Dow, the index, which I never trade, is price weighted. UNH is in the 500s. So it's, I think, the biggest stock in there. There's either going to kick it out or it has to split. I'll give you a scenario. If UNH is down 5% or 10% for one reason, all stocks could be up in the Dow and the Dow will be red because of that one company. Because it's price weighted, not like Apple is $2.5 trillion or whatever it is, the market cap. It carries heavier weight in the S&P because of its size and the NASDAQ. This is not the case. In the Dow, it's how big is your stock price? That's how much weight you carry. That's why Tesla, or no, CRM needed to split before it joined to lower the dollar amount that it can influence. Why is this one allowed to be in there without splitting? So there might be split news or some exit news. If that's the case, how will the stock react? So if you're trading UNH, make sure your trade is potentially conducive to, can absorb a headline. I don't know anything about splits as far as beforehand, but the other day I'm thinking to myself, why is that the case? I can show you from a heat map here, but I don't know how to load it. Anyway, the Dow, the Apple box is this big in the heat map, but it has 1/3 of the effect that this company does, just because its stock is 1/3 of the price of this one. So if this one is up 3% and Apple is down 1%, neutralizes it. If Apple is up 3% and this one is down 1%, Apple's contribution is completely neutralized to a degree, air math. But that's why I don't know what's going on with that. How long will they let it be that high and have that much impact? Okay, volume profile. We can talk about volume profile. So these bars right here is what that question is from Neil. So these volume bars down here, they tell me when something happened. Useless to me. Okay, ooh, yay.
Internet right now. Check your modem or router connection and try again.
Okay, my assistant supposed to have an accent, didn't have an accent. Anyway, so these volume bars do not help me do anything. Whereas this is the same information. And they tell me that this spot is super popular. So if for whatever reason we fall into here, I expect support. Why? It's literally where both bulls and bears love it the most. Not my opinion. It's facts from history based on what? This whole span of time. How long is this? You look back from the 12th on to now. This is the busiest spot. So if we're falling into it, This will be support. Like if here you have the sellers overwhelming the buyers, they'll come into an area where they have more buyers come in because we literally have way too many people interested in it. So on the way up, this will be resistance if price was rising into one of these. And in this platform, this thing is an adjust, a variable look. So if I zoom out, it'll adjust. Now it's looking over this whole period of time. So now we're looking back to June and May, and it's still the same zone. So that should tell you if this falls into 528 or lower, don't panic out. Try to look for longs. Okay, so there are the same pieces of information on an intraday basis, and if you focus closely, you will see them on my screen. You see them right here? So this is just for that one day. And these red lines are the busiest spots from one day. So when they say there's a gap, right? Can anybody show me a gap on this chart based on volume? Yeah, so check it out. A mountain and a mountain and a cave in between. That's because of these two candles. They happen too fast. There wasn't enough transactions here. So that's a vacuum. So if this guy gets close to this vacuum, they'll go straight down. Then that's why they say they fill the gap. Even though you don't see the gap is there. There's a volume gap. So I wonder at what level I would have to go in to see the gap. This is 30 minutes. Let's go to 15 minutes. 5 minutes. 1 minute. There wasn't a gap, just a gapish area, but it's still a vacuum in the, look, you can see there's no volume there. So on the way down, there's no, it's like you pushing a piece of furniture on sand and then you hit a slick spot, you go, whoop. So you're pushing, and then if you lose this, then there's slick spot. Easy come, easy go, right? That's why it happens. Anyway, looks like a good bear put strategy here. On this time frame, it looks like it's vulnerable, correct? But you have to stop out up here, because if they go above here, I don't think you have recent resistance to stop you. Like, what would the shorts be banking on? It's open air. Slick spot, talk about open air. So you have to be careful with your position. Yeah, you can short it. When I say short, I never mean go out and sell the company short. Never, ever do that. I'll explain that to you in a second. But I do mean that you can take a bearish bet on it via debit put spread, which is finite amount of risk, or naked put or something like that. So I see somebody keeps popping in Nucor. Irina, we'll handle Nucor for you. How about we take a few tickers? So what we're going to do now is what happens all day, every day. Looking for opportunities in charts, reviewing them because of demands from people. So let me check this one message, make sure that everybody... I have several things in that. So Nucor, I don't know a lot about fundamentals. I usually start at a day chart to get a big picture. I usually see if I have lines on there. I do. Okay. So I said here, beware of the rally and the fade. So they rallied and they didn't fade. So that is not the case. Now, it's running into a prior fail. So the idea is it an opportunity or not? It could be an opportunity. So this is a prior fail that is definitely resistance, right? So that's what, oops, I did not mean to do that. So the way I would mark it usually, I don't want to create hope that is not there, but I'll do it. I'll say, okay, on a daily basis, whenever they come back here, this will become a catalyst. So right here is resistance and resistance. I think that if they dip, maybe they have support. They do have support into 120. So maybe that holds. Maybe they hiccup here they dip a little bit more and come back. And if they take this out, don't be short because they're probably going to do this. That's one scenario. That's the upside case. So this is one of those scenarios where on the daily basis, so it's not a fast trade, I want to catch the dip if it happens and be long inside this dip. I can buy longs here, but then I don't know why it should go up or it should go down. If there are earnings coming, no, there aren't. Good thing. So this is where I go into a 120-minute chart to see if I can get more information from lower time frame charts. So I can see that there's definitely a resistance spot right there. So look at that. That's a seller right there. I'm not my opinion. Those are actual facts. And there are buyers in here. Big buyer, big buyer, big buyer. So shorter term, I picked right. Anywhere between here, there are buyers involved. I don't need this. So these are supports, short term. So I can be long. I just need to manage my risk. Or I put in an order to buy a call on the way down, and or shares, or sell a put spread. So the idea is, if I do know there's support, so if you force me to trade this tomorrow, I would say I would like to sell a bull put spread and collect money. And this way, I don't need a rally to win. This is not an exact statement. I don't know where it's at. I haven't looked at its earning options. And at the same time, buy some calls or buy some call spreads out in time. So this will be like a month out, 3 weeks out, and this will be like 2 months out, and this will be like a debit call spread. So these are boring trades that should bring about a lot of profits if I'm right about this prognosis. So this would be the way I would trade that. That's Nucor for you. As far as fundamentals, that's on you. I usually look in here and say, okay, what are they doing? All right, so the P&L is not a debacle. And as far as valuation, you can pop in here and get an idea. It's not perfect, but it is an idea. So it's not crazy expensive relative to itself. In fact, it looks pretty cheap, on the cheap side in the last 5 years, 7 years. So there are no flagrant fouls here. So if you're looking for charts, I'll just give you my opinion. So this is what happens all day, every day. You can take that information, literally set a trade on Monday and see if you can make money at it. Now, this is not a trade recommendation. This is me doing an example of how I would answer a question from a member. Can we look at the SPY for next week entry? Anthony, of course, but entry up, entry down, there's the opportunity to short it for next week around Wednesday. So my strategy was, if we're running up into Wednesday, I want to be short after Powell's speak into Powell's event, because I don't think he's going to give us good news, but I will immediately stop if I'm wrong. If he actually changes his words, I think the market will have a relief pop, a big one. So we need a drop because this rally has been too fast. I'm not perma bear. I'm more bullish than bearish always, but I hate it when they rally stupidly. Any thoughts about Costco? I took a Costco. Yeah, good thoughts about Costco. It's here somewhere. I took a long and it paid off too quickly. So I'm looking for a re-entry and I don't have one yet. So I'll show you the chart. There it is. Costco, it paid out pretty quickly. So I'm looking for a re-entry. I'll show you a visual of it. Yeah, so Costco, great company. Now it's vulnerable. It was on my list. It's in here somewhere. There it is. We did a credit put spread. We won. I have to wait to enter on a dip. That was my answer for Costco. And it's going into a tough area. The good news is that they need to start. You see how there's a descending channel? I like it better when they do a sideways channel before they start an ascending channel. So the test will be when they come down to 485, 480. Will they find buyers? There's a gap down here. Interesting. Gap. I'll put an alert. And give myself a heads up. 9.1. Okay, right on. Manuela, what? You took a trade? Any thoughts on? Yeah, so join the group. I bet you would fit right away if you're not in there. I know I have members in here. Sometimes your handles are different here than over there. UNP to 200. I don't know. Let's look at that, Mark. And that's a Warren Buffett stock, is it? Let me zoom out and see where the hell we are. 1 week. What the hell is happening here? Okay, so you can see 180 has been a problem or a pivot since before the pandemic. Was that an all-time high? Okay, so just like the markets, we exploded into an all-time high during the pandemic that was extremely high out of nowhere for no reason. And then we crashed, and then we recovered, and then we took off. So anything below this candle should be support, but unfortunately it extends 20 bucks. And sadly, this is a head and shoulders right there. If somebody wants to be picky about it. I don't like slanted lines like this. Like, I'm not a fan of head and shoulders like this, which means that the downside is kind of wonky. By the way, I'm an engineer who figured all this stuff out on my own. So where do you put this, right? So here's the way I see it. You lost, and you're trying to recover. So from here, if they don't recover this, like Tesla, the 240 line in Tesla, and stay here, if they don't do this quickly, they are in danger of right here doing the fork, retesting this one. And if that's the case, they will finish the job this way. So you have a fork in the road coming, and I would say it's somewhere around here on this bounce. And of course, if you don't bounce and you come down, then the red is on. So there is a danger of losing 60 points. Good grief. Yeah, this was generous, but I don't think we come down to here. I mean, it would need a reason for it to come down to here. What kind of an P&L is this? It's okay. All right, so that is UNP. So if I'm long UNP, I use the rallies to get out. I think there are sellers lurking all over the place. Switch to 15 minutes. I shall do that. Okay, so you're seeing this as an opportunity. I think this is chock full of sellers. So even if this pops, look at what you're facing. Good momentum, higher lows, wacky base. So this is your box. This is your brain on box. This is your box. Check it out. I promise you there are sellers here. I promise you that if the sellers succeed here, they'll fill this gap. So if you force me to trade this, I would sell a call spread. Actually, I will do an iron condor if I can, above here and below here, unless there's earnings coming. So it doesn't look like it. I would range the trade. How much? I would give it room on top of here and below here. I don't know if there's enough premium to do that. I would say you guys fight it out and I'll collect the premiums. Yeah. So we have time. That's a good debate, Mark. If you're not in the group, join. And guess what? We haven't mentioned anything. I believe Benzinga offers a 30-day cancellation. No money, no questions asked. If they do, then listen, use 29.5 days before you judge it, because it takes a while to get used to it. Mark, a whole new world. Listen, if you join the chat room, you will have access to everything I produce immediately in my own words. And the bunch is so fun. The gang is hilarious. We're joking all day. We're profiting all day. We're learning all day. We're serious all day. It's just a great collection of people. I don't know. Where is the link? How much is the room? It's as much as the offer is here. I don't know, 1,700. How much is it, Rodrigo? Do I still have Rodrigo?
Yes, it's 1782 for the year. And
what? Okay, listen. Benzinga is a huge company. I've been working with them for over a decade. I don't work for them, but we work as partners because I love the way they do business and vice versa. And if we weren't doing something right, we wouldn't be here, for starters. Second, that would be my price per month if I was doing it on my own, to a degree. Because if you think about it, oops, sorry about that. If you think about it, the school is open all year. So divide that price by an all year number, it's coffee money. And this, you can make that much in a day. In fact, I mean, I only stopped at one testimonial. I can scroll back. Here's one from copy link. I wonder what that one will say. I don't know what it says, so I'm copying to see it. Okay, this is somebody who brought me a message. I don't think it's about how much money they made. We had 289 people. What time of day was that? Okay, almost 11 o'clock a.m. Thank you, Nick. I joined this room to buy and sell spreads. This is the first week in the last 2 years where I've had all green days. It's also the first week I started selling and buying spreads. Thank you. So this is JBL. I totally remember JBL. So this is somebody who's lost money and they're posting their loss because they made a mistake. So it's an honest room. I'm telling you, it's something special. I've been doing this a long time. Let me see. I'm scrolling back. I'm copying testimonials. I'm bringing them in here to see what they say live with you guys. Tom, are you in here? There's a Tom B in here. Thanks. Oh, there. So Fast Trades is James. He helped Tom make 25% on the meta call. Not me, James. James posts everything. Chopperman does too. He's got a certain stuff. Him and me are like brothers as far as trading. The way he trades is my favorite way of trading, which is the most boring way, but the most exciting way as well. And it's basically selling puts under fire and trying to make money off of people's fear. We had 290 people and whatever timestamp it was. Anyway, and I can bring you timestamps for how many hours a day I've been in there, and the least one was 9 hours, the least one. So I'm bringing you testimonials because I really can't do it justice. I can tell you it's a cool place, but until you see the actual comments from the people, it's just air. All right, what does that say? I was going to point out nothing moved. Wolf is getting smarter in trading. So Luis, my brother, so not really my brother, but this room is the best place to trade. And this guy James can do it on his own. I have no doubt in my mind. He's good to do whatever he's doing on his own. He chooses to be there because of the whole community. Have a great night. Tomorrow we battle. I mean, what kind of a community is that? We only had 190 people because this was probably after hours, after the market had shut down. I can't see it from here. Oh, 1:15. Yeah, the market had already been closed for 15 minutes. So, I mean, just join it. You got nothing to lose except the fact that it's not a free trial. I love it because then you're mentally engaged. You're mentally engaged. Let me see here. Copy link. That one is unusual. I'll check it out. Okay, so this is a person who, this is a message that came from I wonder if I should, when I first started defending, okay, I'm going to bring it in. I don't care. It's a nondescript. This is a direct message. So about defense. She had a credit call spread. It was in trouble. She punted it and I helped her punt it and she managed out of it. I think this is what that thing says. So learning while earning. The opportunity to earn. What's the volume indicator that I'm using? This one here, this one on this platform, the study is called volume profile. Different platforms name it differently, but I believe it's available on all most platforms have it. In this platform, VPVR, VPSV, it's volume profile variable setting. So I forgot what they call SVP. No, that's a different one. VRVP. VRVP. Variable range volume profile. Why is it variable range? Because I can zoom in, it changes itself. I can zoom out, it adjusts to the period of time I'm watching. I reset, it adjusts. You can see how there's a lot of volume up here and nothing down here for this period of time since the 20th. So they better hold above this, otherwise they go fill the gap. What is this? Oh, UNP. Do I use technical analysis? Of course, Henry. Everybody should have a moving average at least on their chart. Machines do. I don't use MACD. It's not for me. It's not that it's not good. It's just not for me. I use RSI as a secondary confirmation thing. I don't need any of these to make money, but the ones I use are a handful, and I'm excellent at using them. Yes, PayPal, if you didn't know that, they were, do you know why they were falling? Right. Nobody said anything, but you would have lost more had you been in stock. So I didn't say they're safe. I said they're not more risky than stocks. Investing is risky. Anybody know why they were falling? Square and PayPal. Bitcoin. Bitcoin, Square, and PayPal. It's crazy. I was like, what is happening with these stocks? They're excellent companies. Why are they falling like they're going out of business? That's because Bitcoin. Speaking of Bitcoin, in October, November of last year, before they crashed, I did a video and a series of trade write-ups saying crypto Bitcoin is in danger of crashing down to 22, maybe even 19. And I will load up. And it crashed. And my entry point was not all in because of other charts that surfaced since then. I bought Solana at 27.4. If you know what that is, that was a bargain. Ethereum at 880, which is also was a bargain. It was at 1600 this morning. So yes, we do crypto. My funnest trades are crypto. I just started this thing saying I booked my profits on Doge and left some runners for this wild breakout. So let's talk Doge, USD. And if I just lost you, why the smartest investor on the planet refuses to acknowledge the fact that he's effectively writing himself out of the best performing asset completely? So you're basically actively saying, I want nothing to do with the best investment that has been out there. So it's just nuts. I'm talking about Warren Buffett. They're wrong. They are absolutely wrong about what they look at with crypto. I'm not a crypto bug, trust me. I'm realistic to tell you that everybody in this room will actively use crypto technology in your life, in your everyday life, in this life. You will need to use crypto, not necessarily pay with the coins. Your life will have crypto in it. Your banks will use crypto. Your dollar is going to go electronic. And if it does, they're not going to invent a new way of doing it. They're going to use the crypto technology that is being developed by these so-called crappy coins you see right there. So let's have a little crypto chat. Just open your mind. Okay. You know, my wife loses her mind when I talk crypto. Cole's cash, and she leaves the room. So it's just bizarre. But let me tell you something about it. And here's the thing. You have an asset, regardless of what it's called and regardless in what form it happens. Okay. I would buy it back at 9. Yes, Ruben. Regardless, or above 16 for a breakout. So for a trade. So in terms of what it is, whom they say it's the argument from super brains like Jamie Dimon or whatever the other guy's name. It's fake. Let's target that fake idea. So the Mona Lisa is man-made. A person drew it. So it's fake, right? Somebody made it. Like crypto, somebody made it. Forget that. Let's say, oh, it's art. Okay. The reproductions of the Mona Lisa, they're not the Mona Lisa. They're fake Mona Lisas. They still carry a lot of value. Why? Because there are people out there that love it. Okay. So it's a matter of taste and a matter of supply and a matter of demand. Taste, there are millions and millions, hundreds of millions of people that want Bitcoin, and there are only this many of them. So whether you believe in its value or not, the mathematical formula for it is there's way too many people that want it, therefore it will have value. So whether you believe in it or not, it doesn't matter. It is a thing. whether it's digital or a piece of art or a piece of cash. Did you know that cash only has value because you believe in it? Let's talk gold. Gold does nothing. It's somewhere along the line in this year 700 or whatever it was, somebody convinced somebody, they're like, ooh, look at that shiny looking rock on the ground. It's yellow. I'll trade you that for gold. And then people fell in love with gold and so they want a lot of gold and it's hard to get. That's why it has value. I don't like gold. I wouldn't pay for it, but somebody else does. I will trade it if I know I can make money off of gold. In fact, I'm long gold right now. I will trade it. It's not for me. I don't believe in its value. I don't wear it. I don't want any of my family to wear it for me to think they're pretty. So it does nothing for me, but I will trade the shit out of it if I can make money. Whoops. Where's the coin? We got to throw a coin in a jar. Let's throw a Doge coin in the jar. I don't have it here. Why is it so dark in here? Dang. Anyway, so I'm in California. It's supposed to be sunny outside. So crypto, whether you believe in it or not, shouldn't be the issue. I'll tell you something about crypto. Here's the thing. If the risk, anybody know, I'm asking you, I challenge you to get the right answer. What's the riskiest part of investing in crypto? I'll give you 10, 15 seconds for that. I know there might be a delay. Having it stolen. Well, Paul, you're on the right track, but you're also a member. I saw you in my room this morning, unless you're a squatter. Government, no. Falling for FOMO, also no. Volatility, no, no. The encryption is broken, no. To me, the riskiest part is trust. Trust what? The platform where you put your money. Like, I needed to invest in crypto. It's like, which one of these freaky sounding company do I want to put my money in? Kraken? I don't think so. You know, so I was like, where do I put my money? Right? So I have a good sized money account now in crypto. And every time I go to log in and it hiccups, this is the day. This is the day I lose my money, right? This is the day. That's my fear. Well, guess what? Now there are American companies that are legal here that do it. So you can open an account with what are they called? The guy with the kippy. Tastyworks. You can trade crypto in Tastyworks, which is a regular trading account, and it's regulated. So that's good, comforting. And here's what I've done for my people is Bito. I've touched on it earlier. So you don't want to open a crypto account. You want to trade Bitcoin. That's your ticker. This one, Bito. It's $12 freaking for crying out loud. You can trade the schmutz out of it and not worry about it a lot. So I've been selling puts at 1150 and sharing it for weeks. So the worst case scenario is I end up owning some Bitcoin, but I'm not selling an entire position at once. So it'll be me like dabbling in Bitcoin now. And if it gets cut in half, I'll double my position. I'm not adding to my risk. I'm shorting the size of risk. I'm taking a smaller bite, leaving room to add more without increasing my risk. I say never average down, but you can average in. So if you wanted to risk 5,000 in crypto and you only deploy 2,000, then if it drops and you can add another 2,000, you're not averaging down. You're averaging into a good position, as opposed to taking the 5,000 and then it takes a tumble against you and you decide to double your risk. So you got something going on wrong and you made it bigger. You just made your problem bigger. No, bad. So I've been selling puts at 11.5 and this rally here screws it up. And now I have to sell at 12. So I said, I'm taking a week off, maybe sell 2 weeks out or just wait off. I don't remember redeploying that risk, but it's been a car payment every week, basically the equivalent of a car payment every week. Who doesn't want that? So that's a way to trade Bitcoin without that extra risk of where do I put my money in Kraken, Celsius, Ledger. You don't need to. There it is. This one tracks the Bitcoin futures, BTCF. Do I have that ticker here? The Bitcoin futures. This is what it tracks. So it's the price of Bitcoin and you can track it by Bito. There's another one, GBTC, I think. The company called Grayscale. they have crypto stock. They don't have options on this one. So you buy the stock itself. So shares, no options needed. If you want to accumulate a good sized position in crypto, you just nibble whenever it gets shellacked. Whenever everybody's pooping all over Bitcoin, nibble. That's it. So, and use like, okay, it's fallen into a prior bounce area. That was a buy to dip opportunity. There's still a scenario of Bitcoin at 11,000 and 5,500. That's why I didn't go all in. I said I'm waiting for 19 to load up. I did load up, but I can quadruple my position to get to my original risk. So I left room to add at the expense of being not long as I want to if it takes off. So that's the conversation about Bitcoin. Don't hate on it because smart people are being idiots about it. All due respect for all these smart people out there, they're ignoring the fact that it is something that's trading with value because there's demand on it. For crying out loud, people buy stars and pet rock and chia pets. So whether you believe in it or not, the thing is making money and it's the best performing asset. Now, the problem is that it has big drawdowns. I'll use one of my friends. He's actually an acquaintance, not a friend. November, somewhere in that area, I put out the video for my members. We had a Christmas party among my friends. And somewhere here, I don't remember exactly, a pre-Christmas party, I was introduced to this gentleman and he was talking crypto and he's a land developer. So he said, oh, I just put in 200,000. I said, ooh, I just sent out a note saying, selling puts, saying, I see it crashing. He goes, no, my friend made $200 million on Ethereum. He told me to load up. I was like, okay. So, and then I haven't seen him since. This summer, I went and saw the release of the movie, whatever, Top Gun. He was there because it's the same group of people. And he was sitting next to me. We were eating before the movie. And I forgot about this conversation. He looks over that way. He goes, well, I guess you're right. And puts out his fist. I was like, what is he talking about? And then halfway through that, I was like, oh, yeah, I remember now. I said, well, I would start nibbling. He goes, F that, I'm done with it. So he lost whatever he lost from 200,000 down to here, and he capitulated. So what did he do? He FOMO'd in because his friend told him to without considering anything else. And he's FOMOing out because everybody thinks it's going to zero. That's exactly the wrong spot. This here, you see that green M? This is a harmonics. So let's talk a little bit technicals right now, some voodoo. These patterns, they're mathematical representations drawn automatically by a piece of software that I pay for. And they look at these relationships right there, these ratios, the distances between these points. And they have 7 of them. And this one is called the Gartley. I don't know how to draw them. That's why I pay for the software that draws them for me. It says right here, okay, pattern complete. Go look for reasons to go long, because if things unfold normally, there should be a rally to here first and to here second. This is what this thing says. I do not disagree with that because of Bitcoin. This is Bitcoin. I think Bitcoin has a hiccup at 25, a hiccup at 33, and a hiccup at 42 to 46. Those are levels I'm looking for, maybe by even like early February. But I am long from the very bottom, And, but that doesn't mean go long. It means go look for reasons to be long. That's what that thing says. That's where people make mistakes. So this is where I go in here. I would be happy. In fact, I'm glad I'm here with you. I'm going to put an alert, GBTC, GBTC 1 week harm RSI 50. I'll know what that means, plus. So I want the RSI, modified RSI that they provide to be above the middle line. And preferably if this was down here, also oversold, then that would be a get long. It would give me one of these green things. This is a companion tool. Then the idea is to stay long. So since I am long, I'm not adding, but I'm very happy to see that. There's a chance Bitcoin could explode higher. So for that chance, I'm in, but nowhere near 100%. So if it collapses and gets cut in half, I would love it. I would absolutely love it because I will double my bet. And if it gets cut in half again, I will triple my bet because I'm still playing with the original amount of risk I had allocated for it. I'm not adding to it. Okay, I feel like I've been talking the whole time. Where the fudge is Rodrigo?
Hey, man, no, it's been a good session here. I've been taking some notes. I hope everybody here is also taking notes because this is pretty much what you get in the live room, right? It's
This
all
is what
day.
you get all day, every day. Why? Because I have a case of this stuff over here. I have two of these right next to my desk.
Yeah.
If you've never had it, this is a free sponsorship for Bang.
Yeah, they definitely need to start sponsoring you, man. It's I think it's about time.
I'm too old. They don't sponsor old geezers like me.
You know, the thing is about what I do like about the chat room there, Nick, is that there's people from all levels. There's total beginners, advanced traders, full-time traders, part-time traders, people with full-time jobs. So it's good to have that community there. It's just better than trading alone is just a big mistake.
Yeah, definitely. Somebody's asking about Carvana. I would avoid it. Just track how much cash they're blowing out. At least avoid it one more quarter. Not the type for me. The trading alone, if I had a tagline for my service, would be never trade alone ever again. It's the stupidest thing you can do. If you have the opportunity to belong to a group, whether you can be in the room all day or not, you should have posse. We are your posse. You have hundreds of people behind you. How much more powerful would you be if you had hundreds of opinions before you take a trade? Let's say your next trade, come in and say, Nick, I'm looking to do this. What do you think? You're going to have 300 opinions right away. How could you make a mistake? Your opportunity to make a mistake goes from this big. You might still make mistakes or schmutz might happen, but your mistake opportunity shrinks drastically.
Right. Yeah, you don't make those. I mean, it's not just about making money. It's also about not losing money, not making those silly mistakes.
The easiest part, most of you, I bet you 100% of you have never picked a bad stock. You've just had bad luck on timing. Can I recommend Starbucks? I reviewed Starbucks in the list and I'm looking for entries. So let me see what I said about it. And this way I'll show you how this, there it is. So if you missed it, you would get this from me. And this is the path I'm looking for. I want to buy the dip in Starbucks.
Yeah, no, definitely. Starbucks is an interesting company there. This is really a great opportunity, Nick. You know, like these market crashes, it's a great investment opportunity and for people to get into the market because you can make money on, look, if the stock goes up, down, or sideways with options.
Yes, exactly. So I want to make money off of other people's fears. If somebody thinks Starbucks is going to 82.50, I'd like to sell them that lottery ticket. That is my opportunity. How can I assist? Madonna, Starbucks. How can I assist? What do you mean? I just showed you. I would buy the dip for the opportunity for it to have a little conniption and then stabilize and rally back. And if you ask me for a specific trade, I will share it. And not out here, though, because I can't hold your hand throughout the trade and I don't want to leave it in your hands. What else is here? Somebody's complaining of having too many opinions. Okay, maybe it's not for you. I would listen to all opinions, and the more the merrier. Michelle. Okay. Michelle, if you're in the live room with me, you will get everything I produce. It doesn't matter what else you have. If you're in the inner circle, you will get every word I produce. How could you assist with that? That being what? I don't understand. You're welcome, Donald. I appreciate it. I'll Rivian, Melly. What else scrolled off the screen? Twinkie, really? Okay. Whoops, that's not the charting software. That was a picture. Okay, so Let me ask you this. What are you seeking an entry point at this late stage, or are you asking permission to book profits? What do you, I mean, a stock does this, I take it off my list. I'll say, wake me up when it's 17 again. There's nothing to be done with Twinkie here. If you're actively trading intraday, join the room. I'll teach you how to do that. But when it goes up that way and you're an investor, I'm not sure what you're asking me. Okay, if you want my opinion, it's in danger of hitting 25.20 and 24.60.
Nick, really quick, can you look at QQQ? Do you think that's a solid bottom for the Qs?
I don't know what you're talking about. Bottom, we ran like 10% in 2 days. So what I said is, which I will be we ran 11% in 4 days. If we don't break out of this tomorrow, we're probably going to have another conniption down to 266, if not more. So if we don't break out of here tomorrow or by Wednesday, I think we have the opportunity to come back and fill this gap, get long.
Right.
So what you're asking, I think, Rodrigo, is is this the bottom? That's what you're asking.
Yeah.
So this, I don't know, how long have you guys been trading? I've been trading a long time. I have never seen a day like this day. This is the day where overnight those bears made a crap ton of money and the bulls lost a crap ton of money. And within hours, the bears had lost a crap ton of money and the bulls had made a crap ton of money. I have never seen anything like this in my entire life. It was so violent that it was amazing to watch. I was like, oh my God, I have chills. And so it has the potential to this have been a bottom, and I have a sneaky suspicion it may be. But if you lose it, then we're losing 3,000 in the SPX. If we lose the bottom we placed on the CPI report a few weeks ago, we are going to lose 3,000 in the SPX. But that's a place where I would load up. So be tactical. Be picky with your investments. There are some stocks like Amazon, you could have been blindly long at the dip from the earnings, and you would have been fine even through losing 3,000 in the SPX. My statement is the market has priced too much hope from what Powell's going to say Wednesday. And if he doesn't say anything new, oh yeah, I'm looking to ease up, like his people are starting to say.
Right.
If he doesn't say that, we might throw a hissy fit one more time to go down in the 3,600 SPX, which would be the same level as this. So let's say the worst case scenario from yesterday would be a down 7%. I would buy that dip.
Right. And what do you think about Affirm? It's starting to look interesting there. It's a great company, but it's just been, like you say, slacked.
Affirm is, I like the business. Everywhere I go check out, I see it there. Pay one-time fee or pay overtime with Affirm. I opened an account with them to check them out one day, and maybe that's why it shows up. Like when I go shop on Amazon, they don't know I used Affirm before or opened an account with Affirm before. So they see me there, and I go to check out on, like I just bought another monitor, and it says pay for it, whatever it was, $276 or $30 a month with Affirm or whatever the number was. I was like, why is Affirm always there, and why is it not making more sales? So I love the opportunity that it provides. So it is a good stock to have. If this is a bottom, this will be your trigger. And I would own shares for the long term, but I would leave room to add more over time. So this would be on the next dip down to 17. I would comfortably sell puts in the 14 to 12 area. When it's falling out of control, I will say, you know what? If you're worried about your shares going below 12 or 13, I'm yours. Give them to me. I'll take them for a little bit at the risk of losing money there. Somebody did mention the risk of losing money on selling puts. They're not foolproof, but if I bought shares here, I'd be down. So let's do it. If I buy shares here and they come down to 10, I lost half my money. If I sell puts here, I'm not starting to lose until from here to here. So I would lose a lot less than half my money. You know what I mean? So selling puts is safer than buying shares. The person I think was insinuating that I lost my shirt doing PayPal that way. Yes, because people who bought shares lost even more than their shirt, because they lost their entire investment from day one. When you sell a put, it's not from day one. It's from when you get assigned, and then you have a buffer below that because you sold the put for a premium. So you buy shares here, you sell puts here at the same time. The stock crashes. This position would lose you less money. That's a matter of math. It's not an opinion. It's a matter of math. So from here, you're starting to lose if you bought shares all the way and all the way down. If you sell the put here, you don't lose, you don't lose, you don't lose. The position looks red, but if you don't do anything, don't defend it, you get assigned, you start losing from here on down, because you keep the premium you collected. So you don't lose until from here on down. The person that bought shares lost all the way down. You didn't.
Right. And what do you think about Netflix? It's made an
avoid. Okay, so I'm going to tell you the Netflix thing. I'm not a hater or anything, but tricky situation. It's been so far being judged by the number of subscriptions, right? The new signups. And they had shrinkage 2 months in a row, and it was a disaster, and it got cut in half. This last report, they went back to growth on memberships. And the reaction from Reed Hastings, I've nailed the last 2 earnings reports before this one based on me reading his words. 3 reports ago, he sounded humble, and that's a cocky SOB. Yeah, so he's very comfortable talking well about and crap about his competition. That's the guy that said at one point his only competition was sleep. When Apple, Disney, HBO, and all of those guys were chasing him, he said he's only worried about sleep. That's how disrespectful to his competition. Well, now Disney is bigger than Netflix in subscribership, and Netflix cannot grow. They delivered growth. So his response was, phew, we got back to growth. That's my impression, the way I read it. And then he said, okay, folks, now that we got that out of the way, let's focus our attention going forward on the sales growth, revenue growth. That's what he said. So he's trying to push Wall Street into looking at his revenue growth. I don't think they're going to listen to him in one quarter. So next quarter, when they report, if they're not growing, if they shrunk, the stock is going to get shellacked. So I do not want to be long Netflix into the next earnings report on that fear. Or if you are long, buy some puts to protect yourself. Shopify, I said buy the dip with confidence. That's a stock I own for a long time, and it paid right away. In fact, I will show you the chart I drew for it. And if somebody followed the chart, they made money. Okay, the orange lines were there before the price action. So now it hit my target. So it could do the purple line. If I'm not long now and I'm rushing to buy long Shopify, what am I being? I'm being a chaser. I'm actively, what do you know now that you didn't know here? Nothing happened between here and here. The company is still growing like gangbusters, and it is a very popular service, probably the best Canadian company ever, at least in recent history. So this is a buy the dip moment. So what do? I'll buy the dip next time it happens. When it falls back under 30, look at my alert. Reload. How? I reloaded. I traded it with credit put spread often, successfully. It's on the list here somewhere. You go through it, you'll find it on the list somewhere. So buy the dip, I wouldn't chase it up here. It will follow the market. Look at this collection of failures, but every failure is a potential to explode. Caution with options on this one. Quotes are flaky. So if you see a spread and it's showing you 50 cents, try more in your favor. Like if you're selling it, ask for 70 and see what happens, and then walk it down. And if you're buying it, offer less and see what happens, and then walk it up. Meta, avoid for now until I hear more from the. I had a whole spiel about Meta. I'm not going to go in here. I'm not catching this falling knife, and I'm a fan. I'm not catching this falling knife. This management company is stuck between being a good politically correct company and a company that wants to make money. Where are you? They're lost in the middle. So I wouldn't touch it for now. Because they shrunk in sales. Nobody's talking about that fact. So here's my beef with Wall Street. When you see a report, you see the headline of the report. What's usually leading the headline? Can anybody guess? What are the words in the headline? Any company, which is completely stupid. You can't evaluate the report of a company that grows fast the same way the company that is static. Like IBM doesn't grow, it shrinks. So you can't say, how much did it grow? It doesn't grow. So I look for profitability. I look for earnings. So every headline you see, they missed earnings. That's the first. I bet you 99% of all earnings headlines from all the publications, if you go to your Benzinga news feed, you will see the earnings. The earnings report, they'll say, in fact, it's called an earnings report when it should be like a report card, because you want to see their earnings, which is the bottom line, but more importantly, you want to see their sales if it's a growth company. So they'll say they missed earnings. That was the concern on Facebook. They missed earnings. They're okay with the sales because they met the sales estimates. The estimates are somebody's opinion. And in fact, the only reason they were happy with that is because somebody said, oh, it's going to be this bad. But they shrunk. I don't think can anybody look it up? Nobody's answered me yet. Has Meta shrunk in the last 5 years ever in sales? They had fewer sales now than they had last year, this quarter. Nobody's talking about it. Why? Because the headline is they met sales estimates, but it was a shrink. It was a negative number. I was like, whoa, Nelly, this is a growth company and it's shrinking? Nope, not for me. I need to hear about, who cares how much money they lost? I need to hear about their growth. What's happening with their sales? You can fix overspending. Like if they missed on profitability, Amazon told us they can tighten the spigots and they're done. But you can't invent sales. So if you have a sales problem, IBM, I would short it right now. If you force me to trade IBM, I would buy puts in it or sell a call spread or both. How about Best Buy jacked up? I don't know. I haven't looked at Best Buy. How's SoFi? I just closed my longs. It was a good win. I would reload lower. This is a stock like a firm. You can't be long both. They're the same stock. You can't be, actually, if you're long Square and PayPal and Affirm and SoFi and Palantir and the IWM, you're long the same stock. So you have to pick and choose. So I'm long a couple of these, so I closed SoFi. But I would reopen it. I would sell puts in SoFi every week until I own my shares.
What about Twitter, Nick?
No, it's done. It's private. What are you talking about? It's gone.
Oh, you can't trade anymore, right?
Yeah, it's gone. Somebody asked me on Friday, should I buy puts or calls on Twitter? I was like, what do you mean? It's off the board. It's gone. It's private.
Right. No, yeah, some interesting stuff there. What about Tesla? What do you think?
I already covered Tesla extensively earlier today.
Yeah,
it needs to be back over 240. Otherwise, it's at risk of falling quite a bit more. It does have a lot of support, so don't short it. Just know that don't go all in. Don't add to your position. If you're long, you're long enough.
what do you think of GameStop right now? It looks
Wait, there's an important question from ZH. Could I buy puts for my portfolio flushing shares? I don't know what you mean. Are you asking me if you can buy insurance? If that's the case, of course. The easiest way to protect your shares is to buy a put spread in an index that mirrors your stocks. So you buy a put and you sell a put below it. Let's do that. So let's say you have a collection of stocks. You go to the S&P and say, you know what? I want to short the market to balance out all of my longs. So what do? I would go to like November 21st or 23rd. And I would buy a put spread. So now I can buy a put. If I buy a put, and this is the SPY, the market, the S&P, and if the market falls, this put will make me a lot of money. But unfortunately, it cost $800 for just one, $850. And look, if the stock market falls $5 or so, look how much more money it can make. Look how much more the puts are expensive when they're in the money. So price falls, the puts get hotter and hotter and hotter, right? So I can double my money on this protection. But that is, you have one up day, the insurance will just get obliterated. So a more moderate way of doing is to doing a spread. So you buy one and you sell one. And you sell it $10 wide. I like $10 wide, and I spend like $320. So for example, let's see here, 375. Okay. 33.75. Okay, so this is $10 wide. It doesn't have to be $10 wide. I'm just showing you one. And if the S&P falls to 375, every dollar I spent here would turn into 1,000, 10. So because it's at $10, so $1,000. So I spend $320, $325, and I own this asset. And this asset will be 1,000 if the S&P falls through 375. So if you expect the debacle below 375, that's a $300 insurance policy that will bring you $700 of coverage. It's not one-to-one, but it's something. So you say, okay, how many do I need? Well, let's remember the worst day in the last 3 weeks. How much was your portfolio down? $5,000? Okay, so that's the number you need to cover, but not all of it. You just need enough to offset some of it. So what, 1,200, 1,300? So maybe you only need 2 of these. So you spend $600 and you're guaranteed some offsetting gains in case of a debacle. That's an easy way to do it.
Right. No, definitely. And you look, we've been here for about 2 hours now, Nick.
Yeah, and I'm hearing my family over there. There's like commotion, so I got to get out of here.
Yeah, no, it's been a great session here. I'm going to stick around here for a couple of minutes, kind of going over some of the things on the chat room. But Nick, any closing remarks on the markets and what you will be looking forward to with the members in the chat room this week?
I'm excited. I wake up every day. I wake up at 3:50, 3:45 every day because I'm on the West Coast, and I love it. If it wasn't fun, I would not want to do it. So I'm telling you, the market rallied too much. Those targets were on the docket for me, but they came too fast too soon. So they hit my targets. In fact, my target above it was 390 and then 400. But I think we need a dip before that happens. However, Wednesday, shine your coin, flip it 3 times and take the average and then do the opposite. It's a coin flip many times over. What Powell says and how we react to it. So be ready. If we're rallying into Wednesday, I want to take a bearish bet. If we're falling into Wednesday, I want to take a bullish bet. I want to go against the grain. You're welcome. You're welcome. You have new ammo, Josh. Join the group if you are able. I know it seems like a lot of money, but I'm telling you, the amount of effort that goes into it and the benefit that comes out of it is chump change. Do it before they change their mind. They are giving it away on Benzinga. They are giving it away.
Hey, and a big shout out here for new family members. Thien_38, Cloyd Dorton. Welcome to the family, folks.
Okay, so everybody that joined, all those who joined, look out for 2 things. Today, I already posted videos you can watch, but tonight I will post, late tonight, I will post a what I see coming next week. Tomorrow morning, I will post the morning note. Check that out because it will have a link to the live room, which is going to be different. I changed it. And it's going to have a new password as well. So we don't have too many squatters in there. So again, tonight, watch the show. Tomorrow, read the note before the market opens so you know where to go and join the live room if you want to. And reach out to me in private. Tell me how you trade so that I have you in the back of my mind saying to speak to it, because I know you're new and I'll start telling, hey, listen, Jake, I know you just joined. This is what that means.
All right, there you go. Nick Shaheen, one last shout out here for
Robert. Yes, you are.
Damn, son, where'd you find this?
All right. All right.
I'm out. Peace. Thank you, guys.
Okay. All right. Nick Shaheen, folks, lead trader at the Options Inner Circle chat room. It's fun. It's great. It's amazing. You need to try it. If you haven't tried it before, I think you should try it. It's definitely going to be a game changer for you if you're trading options, if you're trying to learn options or just kind of get into trading, right? Because there's a lot that is covered, including, yes, Robert, you're grandfathered into the price when you sign up, correct? Marty, I'm posting the link there for you to join. Yes, this will expire at midnight. If anybody does join while we're live, you will get bonus trade alerts, bonus strategies from Nick Shaheen. Just got to make sure that you sign up before midnight. And let me just post this for you, Robert. 1 second. All right. So really quick for all those that joined, remember to fill out the form. There's going to be a form emailed to you where you need to put the address that you want the laptop to be shipped to. You're welcome, Marty. And this is the main chat room, right? This is the static chat room. You can see there's 2 channels. The inner circle chat, this is where everybody is there, right? Everybody, including Nick. And then the other channel here, Nick's important messages, that's where only Nick can post. And he's posting entries, trades, setups. More importantly, you have to make sure you get to this. He'll post it every day. Like every day you'll see this post. And it has the link to join to the conference call, has all the indexes charted out and futures. So this is how you join the live session. The live session is this blue chat room is open pretty much 24/7, right? The live room is open. That is open 9 to 5. So that's 9 to 5 with Nick Shaheen that you're going to be there. All right. Yeah. Cloyd, you got to make sure that check your email. It's going to give you, you're going to get some welcome emails there. Oli, we'll have to see. We'll have to see. I'm not sure about Germany. One sec. You can join though, even if you're in Germany. That's fine. Okay. Andy, I got you. I'll check the email there. No worries. So yeah, just very important, folks. Just know where you have to go, right? This live session, that's where you have to go. You'll also get different content from Nick, like this. For example, this is the Sunday session where he goes over hundreds of tickers that you guys pick, that you guys choose. He reviews them, and he pretty much sums it up here and gives you a nice video.
All right, we are on video 3. That's Pinterest. I love the business. I loved it when it was falling out of.
Just to kind of show you a little bit, K Bruce, let me post the link there for you. 1 second. And yes, the 70% off will expire at midnight, but if you sign up, you keep it. Pretty much you're grandfathered into it, into that 70% off. Floyd, make sure you're there in the morning tomorrow. We got a lot of trades to do. The market's going to be pretty interesting considering, you know, the Fed this week. So I highly suggest, I mean, look, you have a 30-day money back guarantee. Worst case scenario, you get your money back. Okay. That's not a bad worst case scenario. So, and you're going to learn a lot. Absolutely. You're going to be part of a great community that we have there. I can tell you, it's, you know, really, really focused individuals there that are just trying to make money and learn together. Scott, welcome to the family. I see you there. Big shout out. Let's go. All right. Okay. So this is, again, just really important to know where the chats are, right? These 2. Okay. Then once you click here, this live session, whenever it's actually there, this will take you to the live call, the webinar style, where Nick is the entire day. Okay. The entire day. Nobody else does this. Okay. No one else. Only Nick does this. So if you're looking to learn, great place. If you're looking for trades, great place. If you're looking to be part of a great community, this is the place, right? So I think you guys should try it out. As a trader myself, I can tell you this has helped me a lot. It's helped me make less mistakes and be more assertive with my trading. And, you know, ultimately, you're always going to have losses, but the wins overcome the losses. And and typically when you're new is when you're going to have the majority of your losses, right? Because you'll make mistakes and all that. You don't know a lot of stuff. So that's why it's important to start with the right group, right? Not just any group, the right group, right? It's like, you know, Reddit, Wall Street Bets, you know, it's totally different, right? We have these are people from all over the world, pretty much. It's only annual or lifetime, Ian. What's going on? David Bell. Clint Weissman, how do I join the group? Clint, we're posting the link there on the chat. Make sure to use that link so that only, yes, there's no questions asked. Correct. There's no fine print. It's a clean and clear 30-day money back guarantee. I know there's a lot of companies that, you know, will put on the fine print that, you know, you can't get a refund unless, you know, it's raining and it's a Tuesday and, you know, all sorts of weird stuff. So there's none of that here, right? I mean, if for any reason you don't like it, you get your money back. That's it. You move on. And if you like it, great, be part of the group. It's an amazing community that we have there. The chat room's been open probably for a little bit more than a year. And yeah, it's definitely great. I think you guys should try it out, at least for the 30 days. David, we can try to Canada, but if anything, we can just kind of replace that with some other stuff. Just email me if that's an issue. Craig, I would say that Nick, Nick is there the whole day, like in a webinar style. Um, so it's pretty much it's pretty much engaging the whole day. Like he's showing his charts the entire day. So there's never like it's not like just the chat room. You have the chat room. You can private message him. There's a lot of people that make strategies, create strategies with Nick, ask him for feedback on his trades, ask him for feedback on setups, and that's how you learn, right? With an instructor, with a mentor, just like anything else, right? So this has been great, folks. I really appreciate all you guys being here. Great session there by Nick Shaheen. Big shout out to all the new members. So let's go ahead and rip it here for all the. All right, folks. So big shout out. I'll see you guys in the chat room. Thanks a lot for being here. And make sure, again, everybody that did join, fill out the form for the laptop to be shipped to. And also make sure that you can get in there today. I'll be around here for a couple minutes. If you have questions, my contact is there on the chat. Thanks a lot, folks, and we'll see you in the chat room tomorrow.